You're listening to another episode of the Young Investors Podcast, so sit back and relax as myself, Brandon, and my buddy Hamish discuss the latest in the world of finance and stock market investing. Now, a quick reminder before we get into the podcast is that nothing in this podcast should be taken on as personal financial advice. If you're ever unsure about your finances or investing and you need some help, make sure you reach out to a qualified financial advisor. But with all that said, let's get into another episode of the Young Investors Podcast. Welcome back, guys. Yet another episode of the Young Investors Podcast. How you doing, Hamish?
I'm doing well. I'm going well. How are you?
Yeah, going well. Now we have to say this immediately so that we don't forget to say it.
Yes.
We're hoping to take a little bit of time off over Christmas to give us a bit of a break. So we're going to try and we still want to get content out to you guys. So we're going to try and pre-record a Q&A episode. So literally, if you have any question about anything really, then chuck it in the comments section of the most recent podcast over on YouTube, and then we'll tally them all up, and we will go through all your questions if you have any. I'm hopeful that you guys have questions. Surely we haven't covered every single topic that exists yet.
It turns out we have.
Yeah.
All right. Podcast is over. See you guys.
Oh, I get that's the end.
We're done.
Well done, Hamish. 104 and done. Is it 104? I never know. That's the classic. You know that it's really me if you say, "Hey, Brandon, what podcast episode is this?"
Yeah.
I'm like, I don't know.
It's 105 today, so you're close.
105 today. Right. Okay.
Yeah. No, but please head over and leave us lots of questions. youtube.com/the Young Investors Podcast. And leave your questions there. And I reckon that'll be a good episode. I always enjoy doing those. Obviously, doing the news ones are a lot of fun. We can talk about things that are happening this week, but the Q&A ones are really good as well, just to kind of discuss some evergreen investing and personal finance topics.
It's good to see what people are interested in and what people are asking or what people are struggling with, and it always feels good if you can lend a hand. Sometimes we get questions and I'm like, man, that goes over my head too.
Oh yeah, absolutely.
But hopefully sometimes we like to think that we make a difference. Anyway, what's been going on with you this week?
It's been a rough week actually.
Rough week,
my iMac that I used to edit just decided to not turn on Friday, I think it was.
Oh no.
So that was painful. That's currently getting fixed, so I haven't got that back yet. So this week, it's caused a few complications this week. Videos, I've kind of just made some light editing videos this week just because I'm working with a less powerful computer. So it's really painful to edit. I put together an analysis report for my students in the group, and that was, I think I've lost that, which I probably spent more than 12 hours writing. So that's fun. So it's been a bit of a painful week this week, but hopefully I'll get it back next week and we can be back to normal.
I get knocked down, but I get up again. So that's your theme song right now.
Yeah.
I hate it. That's kind of like when you've been editing it, or it's much worse than when you've been editing in Premiere Pro and then you haven't saved in a while. It just crashes on you.
Yeah.
That used to just crush my spirits.
Yeah. It's just frustrating because I'm usually so good at saving, backing up to the drive, backing up to the cloud, but I just made a mistake.
This one caught you out.
Yeah. Always happens like that. Yeah.
Bummer, dude.
How's your week going? You've been very, very busy over the past couple of days.
I've been very busy. If I sound a little bit tired right now, then that's why. Yeah, so as probably a lot of you guys know, I'm trying to do 25 days straight of videos, and it turns out it's much more challenging than what you might think. The hard thing about it is just the fact that you have to, it's every single day. That's the real rough thing. It's like you don't even have one day where it's just like, no, I'm get to sleep in today or something. It's like every
rest.
day. Wake up, make a video. If you have any video topic suggestions, please also let me know because I'm struggling to come up with ideas. I'm sure I'll find something, but and we got to do our collaboration as well.
We do. I wonder when we'll get a chance to do that. Whenever's best for you, I guess.
Yeah. We'll figure out what we want to talk about and make a video about it. That'll be good.
Definitely.
Anyway, should we jump into the sponsor, and then we'll get stuck into these news stories?
Definitely. Yeah. So today's episode is sponsored by Sharesight. So Sharesight is an application that you can use to track the performance of your stock portfolio. And it's really good for keeping track of all of the different types of gains that you experience as an investor when you're buying shares. So capital gains, dividends, dividend reinvestment plans. It will do all of those calculations for you. So that's a lifesaver if you have index funds or even shares that automatically reinvest the dividends. Currency gains, if you're buying shares internationally or hold foreign currencies. And then the main reason why I personally use it is when it comes to tax time. So Sharesight generates up to 10 different reports that can be easily used at tax time to work out things such as your capital gains, your dividend income, and more. And at the moment, you can try Sharesight for free by heading over to sharesight.com/young investors. That site spelled SIGHT, sharesight.com/young investors. So you can use that link to try a free plan for as long as you want. It doesn't have a free trial period or anything. You can try it for forever. But if you want to sign up to a paid plan and get access to all of the different types of reporting for performance and tax and all of that, then you can also sign up to a paid plan. And using that link, you can get 4 months free off a yearly subscription. So go check it out if you're interested.
Yeah. Did you see the Trump speech that came out this morning?
No, I didn't even watch the one from last week that we...
Oh my gosh. I haven't watched it yet because I only just noticed it this morning just before we were starting the podcast. But apparently it's a 42-minute speech on basically how the election's been stolen from him. I only watched a 2-minute clip, but 2 minutes was enough. I mean, you get the gist. So the article reads, President Donald Trump has surprised the United States by posting a lengthy speech on his social media accounts in which he repeats a deluge of baseless and disproven claims about last month's presidential election.
I love that description.
The pre-recorded speech, which is 46 minutes long, was filmed in the White House. Mr. Trump posted it without warning shortly before 4 p.m. local time. Man, just crazy. I mean, I'll probably have a bit of a listen to see what he's coming up with now, but it's kind of just comical at this point. I mean, dude, you got beat. Yeah. I mean, there's been so many instances where you've tried to bring up, tried to push for legal action, and it's just been thrown straight out. I guess maybe that's just the type of person he is. He just cannot accept loss. He just can't handle it. He just will refuse to. But it's like, come on, dude. And in the 2-minute clip that I saw, he's talking about, I'm trying to defend the Constitution and blah, 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 and we have to stand up. This is absolutely outrageous. It's so crazy. Anyway, man, I feel like everyone's over it at this point. It's like we've been there, like Biden won, and now everyone's kind of moved on, except he's still yapping away.
Yeah, I mean it's a pretty good example of what he would describe as fake news.
Yeah,
because there's no evidence of it. I mean, there's a little bit. I mean, people will point to, here's an example of voter fraud, but there's been no evidence of widespread fraud.
And
that's just.
I was going to say, the thing is, it's like when Warren Buffett says, when he's talking about a company that's been found out to do something wrong, he's like, yeah, that's fair. But at the same time, there's also like Berkshire Hathaway employs like X thousand amount of people. You can imagine that there's something bad going on. And I think about that kind of quote with the election too. It's like, yes, however many, was it like 140, 150 million Americans voted or something like that. So in 150 million, yes, there's going to be some things. Like, you're not going to have 150 million perfect textbook votes. But I think the main thing is that what he's trying to say is there are isolated things here and there that should mean that we just do the whole thing again, kind of thing. Whereas everyone else is like, well, no, it does need to be a widespread issue before it actually becomes something that they want to look at. Because it's like, even when you do a recount, you end up with a different amount of votes, but it's only differing by like 50 to 100 votes. So
yeah.
Anyway, That's all you got.
Nothing I disagree with. Nothing I disagree with you with what you've said. I think what you said before is probably true. That like at this point, like what's even the point, Trump? Like
what's the point?
It's done. Like people have moved on already.
Yeah, I think at this point it's like the point is to try and save face, but at the same time, I think that him doing this is hurting his reputation much more. Obviously, not with his loyal Qantas supporters. Sorry, but yeah, I just feel like for the greater American public, he's just hurting his image by doing this stuff. I don't know.
Yeah, you want to be a fair loser. And I mean, if you think there's voter fraud going on, investigate it. Like, I want to know what's actually happening. Like, I want to know the truth at the end of the day. So investigate it, look into it, see if there's any evidence. If there isn't, though, you don't just keep crying foul. You have to look at the evidence that's presented, and you're never going to get a full picture of what's happening because, you know, it's a highly complex system, but you just have to look at the evidence that you've got and work with the system that you have. And I mean, exactly at this point, it's a little bit, it's a little bit over, I think.
It's done.
It's way over.
I don't want to talk about it again. I don't want to talk about that dude ever again.
Bye.
See ya. See you later. What should we talk about next?
I think we should talk about this Musk news. There's a lot of Tesla news this week.
You know, I've been so busy, I haven't even looked at this. So I think you're going to have to take me through this.
Yeah, that's okay. Yeah, I mean, I found one news story about Tesla, and then it led me to another one, and then it led me to another one. So there's 3 things going on at the moment.
Oh, and, okay.
They're all kind of linked together. Not really. Oh, a couple of them are linked together. But the first is that there was another internal email that was leaked. That's from Elon Musk that was going to employees, and that was leaked. So this has happened a few times. It's pretty common at this point. But basically, I'll read out kind of the first part of the letter. He said, when looking at our actual profitability, it is very low at around 1% for the past year. Investors are giving us a lot of credit for future profitability, but if at any point they conclude that that's not going to happen, our stock will immediately get crushed like a souffle under a sledgehammer. So it was a pretty brutal, I guess, email talking about the fact that the stock is inflated at the moment based on people's high expectations of the profitability of the business in the future, which is, I mean, that's sort of no surprise to anybody, but the rest of the email went on to talk about sort of Musk was talking about the importance of cutting costs to continue to make their cars more affordable, pretty typical stuff. But I thought that it kind of made an interesting discussion point. And I'm not sure. I mean, this is just an email. Like, we don't have to read too much into this, but it kind of, I'd love to hear your thoughts on this, because there's kind of 2 sides to this that I saw when I heard this. The first is that certainly cutting costs is important. That's obviously part of their business model to continuously make cars more affordable. But if the stock has been pushed up by high expectations, and a lot of these expectations are like, 6 months out, 1 month out, trying to meet those expectations just to keep the stock price up, I would see as hurting the business long term. Like, I think that Musk shouldn't care about the stock price. I think that it's more important for them to focus on the business and where that's going over the long term, because I personally think that investor expectations and where the share price go are both really volatile and often are out of his control. So like, even if he does a lot of cost cutting and can meet those, those next quarter expectations, the next year expectations, the stock could still do anything that's still kind of out of his control. But the other side of that, and I'll just give the other side, and then I'd love to hear your thoughts. The other side of that is also that Tesla actually does kind of rely on the share price, because they have been using it to raise capital. So particularly for businesses like Tesla, where they're in a state of needing money to expand constantly, so whether that's debt or whether they're selling more shares, if they can get a high price for the shares that they're selling, then that's a huge benefit to their business. So it does in a way matter. But I don't know. What are your thoughts on all of this?
Yeah, well, this is, I definitely agree with you when you start talking about, we need to watch it because of our stock price, blah, 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 then you've lost touch. It's just like, hang on, dude, you're running a business.
Yeah.
However, I think the reason that he spoke about it in this email why he spoke about the stock is because this was an employee email, right? So this is sent out to Tesla employees. And I think I know all Tesla employees receive some stock compensation.
Right.
So I think what he was doing is he was putting this in terms that really relate to the employees. And I think this is I think this, at least the snippet that you've just chucked in here, I think this is definitely Elon code for saying, hey guys, I'm really asking you for really good execution. Yeah. I think that's really what he's just asking for. He's just like, by saying investors are giving us a lot of credit for future profitability, but if any point they conclude that's not going to happen, our stock will immediately get crushed. So I think that's just like, hey guys, it's his way of saying, hey guys, we need to continue to execute, or your stock, which you get under this employee compensation plan, might be worth much, much less.
Yeah, no, I think I completely agree with you. I think that the first time I read it, I was like, wow, really, Elon? Like your stock price, it doesn't matter. But upon reading it more, I mean, the things that he was talking about further in the letter were just things that just will support the business long term. It's not like he's saying, we need to meet this Wall Street expectation, so let's do this instead of doing this. But yeah, it's, I don't know, I just thought it made an interesting discussion point. It certainly made headlines. But I think
you're definitely right. Yeah, I think you're definitely right. If you're getting a management team or a CEO that's starting to talk to their employees about keeping the stock price up, then that's concerning, because CEO is not. The CEO doesn't manage the stock price; they manage the business. Yeah. So that should be ultimately there, because you're right. You want your opinions, your thoughts to be aligned. What you want to happen to be aligned with the CEO as an investor. So you hope that they're not thinking about keeping the stock price up over the next 6 months. You're hoping that you want to hold this business for 10 years. So you're hoping that the CEO is like, okay, I want to focus on what's, making that new factory that's going to increase our profitability by this much in 5 years,
Yeah. And I mean, you do see management teams that care more about the stock price than the actual business, because you see it when they move money from, investing in the growth of the business long term to just buying a bunch of their stock back just to keep the stock price high. You see that a lot. You see a lot of management teams that could be just spending money on investing in innovation, investing in research and development, and building out their business fundamentally, that might not benefit the business right now, but will over the long term, versus just pumping the stock price up even though it's at all-time highs. You see that quite a lot, which is disappointing. But yeah, an interesting sort of thing. But in relation to that, or kind of, I'll get to it, but this led me to discover that Michael Burry has opened a short position in Tesla. Yeah, that was very interesting. Michael Burry, of course, famous for his investment during the global financial crisis, shorting the mortgage-backed securities. So very interesting that he's taken a position. We don't know what size of the position is. So we don't know if it's if it's a big short or if it's just a little one. No pun intended.
What a joke.
But he basically just tweeted this. And this was immediately after that letter was leaked. And basically he tweeted a photo that I thought was interesting of the revenues, profits, and prices for all of the major car makers. There was a list of maybe like 30 or 40 car makers. Yeah. And then he basically provided a tally of the revenues, the earnings, and the price of all the car makers except Tesla combined. So revenues for all of the car makers except for Tesla has been, in the last year, I guess was $2.3 trillion, earnings before interest and tax of $102 billion, and the price for all of them. So if you were theoretically to buy all of the car makers except for Tesla, you would be paying just under $1 trillion, $991 billion.
Right.
And then you can compare that to Tesla, which has revenue of $25 billion, earnings before interest and tax of negative $70 million, and a price of $646 billion. So that was a lot of numbers. So let me just consolidate that. Basically, if Tesla's stock price goes up just 50% from where it is now, then you would be paying the same amount as if you bought all of the other car makers combined.
Jeez.
And the difference between those in revenue is Tesla's 25 billion, all the rest is 2.3 trillion. So that was kind of his way of showing that Tesla is a little bit inflated.
Man, insane. They are some shocking stats. I mean, it's hard not for your company not to be severely overvalued if you have like the last 12 months that Tesla's had. Yeah. And I don't know as well how, obviously the stock's gone up recently because Tesla's been announced to go into the S&P 500. So all of the ETFs, index funds, they have to buy in before a certain date. I think it's like the 21st of December. So I don't know how all that buying affects the stock price as well. So there's like, and I think just over the last 12 months, there's just been there's been positive catalyst after positive catalyst after record breaking earnings after this, after that, which is just, they just drive the stock price up so quickly. And but like I'm a Tesla shareholder and I'll probably hold these shares forever, to be honest. But I will definitely admit that Tesla stock is ridiculously overvalued. I mean, we're talking, I just looked it up, PE ratio, and I think I've said this a couple of times, PE ratio of 1,127. Normally, we're looking at companies with PEs of like 20 to 30. Well, recently it's been more like 30, 40, 50 because everything's so high at the moment. But even still, that's a big difference, right? That is, and Elon is right in what he says in that little snippet. You know, investors are giving us a lot of credit for future profitability. And I guess that Michael Burry is just betting that the stock will probably cool off before Tesla achieves that long-term profitability. Because, I mean, Tesla has to prove... Well, I mean, look at the number. All of the other car makers combined, revenue, 2.3 trillion. Tesla, 25 billion. So, yeah, it's just crazy. I mean, there are certain things really going for Tesla. Like, I won't deny, Tesla is definitely more than a car company. So I don't think from Michael Burry's perspective, yes, where the business is right now, the way they make money is selling cars. But I think long-term Tesla is definitely more than just a car company, which should be factored in, at least in part. But obviously I don't think it means, you know, a PE ratio of 1,100 and, you know, a price that's, you know, if the stock went up half, then it'd be worth all of the other car makers combined, you know?
Yeah, I mean, it's certainly not a one-for-one comparison between Tesla and other car makers, but...
It's not, but it's a good example.
It is. Yeah. I mean, the fact that their price is almost at equal to all of them combined is just...
That's insane.
That's kind of the thing that's insane.
Yes.
Regardless of what other business Tesla is in, even if they're just printing money, that is still insane. Well, maybe if they're not printing money, but anything short of that. But I mean, in this tweet, the other thing that he said was that he said Musk should issue 25 to 50% of their shares at this price. So he's basically saying that, you know, the stock's so high, you should just be selling as much new shares as possible. And he said that if they did that, that's not dilution. That would be cementing permanence and untold optionality. So just basically saying they could generate a lot of capital and have a ton of options in the future and not be reliant on debt or all these other things. And then he said, if there are buyers, sell that. And then he said, hashtag Tesla souffle, which is a reference to Musk's email, which he made earlier that day.
Right, yeah. There you go. I mean, he's not wrong.
Yeah, and I mean Musk did do that, right? A while ago. They issued shares when the stock was up at about 800 before the split.
The last time they issued shares, they did it for no reason. Yeah. So that was the last time. That was the first time where they've issued shares without needing to deploy that money into something. The explanation they gave for the last one was for it essentially boiled down to them saying for general purposes. Yeah. So when companies start saying that basically means that it either means that the company's in deep trouble, which obviously Tesla now is not, or it means that the company is simply raising money because the stock price is high. So they're just like, yeah, why not? I mean, we can get a lot of money for very little dilution. So that's a deal we're going to take. We're going to use the cash at some stage into the future. But if we needed that cash at some stage into the future, who knows? Maybe we wouldn't be able to get such a great deal. So they just do their raising now instead of later.
Yeah. And I mean, there's certainly demand for Tesla stock at the moment. So,
for sure. So
they could definitely.
It's funny that Burry said he's shorting it, and then he's like, "But Musk should definitely he should dilute. Like, this is perfect timing."
Yeah, exactly. Very interesting. Yeah. Very interesting stuff. And then there's one other bit of Tesla news. And there's a lot of speculation going around. Well, not speculation, but there's a lot of articles talking about Tesla being open for a merger with a car maker.
A merger?
Now, this is a bit of a non-story, but
it's a bit of a speculative thing.
Yeah. So Musk, it was on a YouTube live event earlier this week. And he basically was asked a question about buying another car maker or merging with other car makers. And he said that they wouldn't do a hostile takeover. So a hostile takeover is basically where you acquire a company without the management team's permission of that company. So rather than just striking a deal with the management team saying, hey, we can buy your company for $20 billion, you just buy as much of stock, buy all the stock or buy 51% of the stock, and then force the management team out. So they said that they wouldn't engage in that, but Musk said that they would consider a merger with a legacy car maker. So it's just a comment that he made. It's not like it's some statement or it's not some grand statement. It's just something he said on a live event. So read into that whatever you will. But that might be something we see at some point in the future.
There you go. That would be bizarre. I can't imagine. Because Elon's always he's always going on about how his company's so much different, so much better than, the other companies are lagging behind. So I just don't understand why would he want to merge with one?
Yeah.
Maybe just for an already kitted up factory, but maybe. But then at the same time, it's like, well, you'd still need to completely retool all those factories. And they're not laid out like he has such pride in the Gigafactory design, how it's like the machine that makes the machine and it's perfectly designed to be as efficient as possible kind of thing. So that seems strange to me.
Yeah, anyway, maybe there's some intellectual property involved or systems that car makers that have been around for a long time have in place that just take a long time to build, like networks of employees and that sort of thing. I'm not really that familiar with the industry, so I mean, I'm sure there's some benefits, but yeah, it's. He talks a lot about how these car makers need to basically not tear down, but completely redesign their manufacturing centers to change from combustion engines to electric cars. So, I don't know. Very interesting to hear him say that at least.
Yeah. It's an interesting one. Should we move on? Should we leave that one there and move on to something different?
Yeah. What have we got?
How about this? We'll talk about Qantas and Virgin. There might be a little bit of light at the end of the tunnel. Who knows? My headline that I wrote is Qantas and Virgin starting to pick themselves back up. So there's a little bit of news on Qantas and a little bit on Virgin, different news stories, but we may as well cover them both. It says here, Qantas has flagged the reopening of state borders before the Christmas holiday period will assist in repairing the company's hemorrhaged balance sheet, but billions will still be lost from the ongoing halt of international travel. The major airline's chief executive, Alan Joyce, said since the reopening of the Queensland border with Victoria and New South Wales, close to 200,000 fares have been sold in the past 72 hours, bringing domestic capacity, this is the interesting thing that I took out of it, bringing domestic capacity to 70% of pre-COVID levels.
Wow.
Overall, we're optimistic about the recovery, but we're also cautious given the various unknowns, he said. So there you go. That's kind of interesting. I didn't know. It's a nice little morsel of information that domestic flights are back up to about 70% of where they were.
Yeah. I wonder if that's a spike and whether it will go down again before it goes back up. Because I do know that there's probably a lot of people that as soon as it was open just wanted to book something to go to New South Wales or vice versa. Point. So I wonder if rather than this being a representation of, the way up back to normal, whether it's a spike and then it will go like, let's say 50% and then it will trickle back up over time to 100%. I don't know, but
no, it makes sense. And this he could just, this could be opportune timing.
Yeah.
He sees that the borders are opening, 200,000 fares in 72 hours. Right, I need to get over onto the media and I need to say that statistic.
Yeah, bring some confidence back into people flying. 70% of pre-normal levels. Like everyone else is flying. Don't be
based on the last 72 hours, we're back to almost pre-COVID levels. And then it's actually just because people have just been told that they're allowed to fly again. So everyone's buying like crazy.
Yeah. Very interesting.
It's kind of like using Black Friday sales data to assume a new normal for your business,
Yeah, that's true.
Just like
that is true.
Over the past 3 days, our sales have gone up by 200%. So we anticipate that's going to continue into the future.
Yeah. Although, I don't know much about leisure travel, but certainly between the flights between Victoria and New South Wales is the majority of Australian corporate travel. So that being open is a big move for travel. I would imagine it's probably up there as being a significant chunk of Australia's travel overall.
Right.
So, yeah, it's a big deal for that border to be open. And I guess we'll kind of see the effects of that over the next year or so and see how quickly it comes back, whether it's going to be the V-shaped recovery everyone's expecting for the economy, that everyone just kind of goes back out and continues spending as normal, or whether it's a little bit slower. People are more hesitant to spend because they're a bit more cautious about their job and their savings accounts and that sort of thing. Be interesting to see what happens if consumer behaviors change at all. That's always something that no one ever sees how it's going to change over time.
At least this guy is honest here. He said that we also have a lot of repair work to do on our balance sheet from the extra debt we've taken on to get through the past 9 months. At least he's honest.
Yeah.
I'll just read the Virgin part of this story as well. Virgin Australia is expecting to close to 80,000 additional seats. What the... I read that wrong. Virgin Australia is expecting close to 80,000 additional seats will be added to its East Coast flight routes by January 2021.
Right.
So similar kind of story, but less on the numbers. As Queensland reopens its borders to Victoria and Sydney, so this is like the same news story. The country's second airline carrier says it's anticipating 78,000 seats per week will be available on flights between the three major eastern capital cities. Coronavirus restrictions easing across most of the nation. Virgin says it believes the capacity will be at least 60% of pre-pandemic levels. So there you go. Close numbers. Is that all? Yeah, that's all we've got for this story. But interesting. Fingers crossed for him. I like having the option of flying.
It's a tough
especially
industry.
In Australia when we've got so far to travel between major cities.
Yeah, it's just a tough industry. It
is
very,
for
very
sure.
tough. It's one of those things, especially leisure travel. It's one of those things people cut first when they're in trouble, and it's a very expensive business to run. Believe it or not, planes are expensive. You heard it here first.
They cost a lot of money to buy and to operate.
Oh dear. All right. So, I also have some vaccine news, but it's literally just one sentence. So I'll just,
okay.
I won't turn this into a vaccine podcast like it's been over the past few weeks.
Yep.
But Pfizer, we spoke about last week how they were trying to get US approval. We still don't know about that. We'll find out on the 10th of December, but they quickly got UK approval. They applied for it and on the same day they got approved. So, they can manufacture and distribute in the UK. So that's obviously very, very big news at the moment.
That is quite big news. That is a short story, but a key story.
Yes.
I'm glad you brought that to the podcast today, Hamish. Thank you very much.
You're very welcome. You would imagine that the US would approve it now that the UK has. That's probably not their policy. Like they always have to do their own independent work, but you would imagine that it's going to get approved.
I think there'd be a little bit of pressure.
Yeah, exactly.
Let's get this done, guys. Come on.
Yeah.
Get the testing done. Let's go. FDA sweating over there. The UK's beaten us. But no, that's obviously really good news. I mean, thank goodness. That was the one that was like proven to be 95% effective, right?
Yes.
So,
yeah.
Yeah. So awesome. So that's good. They can get it, start manufacturing that, get it to high risk patients high risk populations as soon as possible.
Yep.
That's fantastic. I mean, vaccine news. It's good news because it means lives are saved. So good job.
Exactly
good
right.
Good job, Pfizer. High five.
And then,
do you want to talk?
Yeah.
Oh yeah, sorry.
I was just
what were you going to say?
No. I was just going to go on to the next story.
Yeah, go for it.
Yeah, so I was going to say back into business news. So it's a big acquisition this week. Salesforce is going to acquire Slack for $27.7 billion. Big acquisition. So the largest acquisition in Salesforce's 21-year history. And basically Slack is this kind of work/business communication service. It's kind of like Discord, kind of. It's like Microsoft Teams. The company was founded in 2013, which is just insane, right? Company founded in 2013
7 years ago.
and then sells out for $27.7 billion.
Oh, just insane. Software as a service.
Yep. Exactly right.
Get around it.
Pretty crazy. Yeah. So, I mean, it's basically a communication service. They have chat rooms, voice and video calls, task scheduling and project tracking, those kinds of things for businesses.
Right.
And then Salesforce, which I actually didn't know that much about either.
Yeah, I've heard of it, but I don't really know.
Yeah, so they were founded in 1999, and they're basically a customer relations manager, which I had to look up what that was. Basically, it's a cloud-based software for organizing the communications between a business and all of the people involved in their business. So their customers, their clients, their suppliers, and their teams and their employees.
I see.
The acquisition makes a lot of sense. And Salesforce was actually one of the first companies to start a SaaS company, a software as a service company, which basically means that a SaaS business is basically how we can now access software online from any device without having to install it. Which is something that's happened just very recently. It wasn't too long ago where you had to install something if you wanted to access the software. Now, most things, right, are just a cloud-based, which is
just access it.
Kind of crazy. And I mean, I don't have sort of too much to say on this news story, but basically the headline is that the acquisition will help Salesforce to catch up to Microsoft in this space. So there's been quite a big competition between those businesses. Microsoft, obviously, a much more long-standing business, but both are new in this space because it's a new industry. And most people, well, at least the person whose article I was reading, believe that Microsoft 365 is ahead of Salesforce. And within Microsoft 365, they have a program called Microsoft Teams, which is very, very similar to Slack. So basically, this acquisition allows Salesforce to add their own Microsoft Teams, basically, to have something very similar to Microsoft in the communications front. So that's kind of the story out of that. Cool. Yeah, one of the biggest acquisitions we've seen this year. In fact, I think one of the biggest of all time. In fact, I think the Fox acquisition was the biggest of all time. What was that, like $60 billion or something insane?
I don't know. You're talking about the Disney
and Fox, yes.
Disney Fox thing. Yeah.
That was, I think,
I can't remember what that was worth.
I think it was $60 or $80 billion, something crazy. But yeah, this acquisition's certainly up there with one of the largest that's ever happened.
I'm trying to find the dollar figure on the acquisition, but I cannot find it. Gosh.
Maybe search for merger, because I think it was technically a merger.
Oh, was it?
Yeah.
Yeah. No, I might have to research that later and put it back in somehow. Maybe we'll just mention it next week. But that's okay. Definitely a big boy, $27.7 billion. It's not chump change, that's for sure. Holy smokes.
Yeah, I didn't know too much about these businesses. It's not something
I don't either.
I've had to use in my business so far. Not too many employees to manage. Just kidding. There's no employees.
No employees to manage. I think I can just write something down if I need to remember it.
Just set myself tasks, communicate with myself. That's pretty much it. So no requirement to pay Salesforce a monthly, but
that's funny. All right, let's move into this last news story. I got nothing to add to that other one.
No worries.
Because I'm in the same camp. I don't really know too much about either of them. Australia's debt. You want to talk about that? That's a cheery news story.
Let's do it.
Let's do it.
We don't have any, right?
Article? No. We're actually we are essentially comparable to Google.
Right. Okay.
We're like a very big Google. Yeah. No, it's fantastic. Man, imagine if a country's balance sheet looked like Google's balance sheet.
Everyone
obviously
would be
scaled up accordingly, but that would just be unbelievable.
Everyone would be so annoyed by that. They'd be like, "Why are you holding our money?"
Yeah. Anyway, so what this news article reads: this week, the Queensland government became the last state government to release its 2021 budget. It means the Commonwealth government, all 6 state governments, and the Northern Territory government have published their 2021 budgets. Provides an up-to-date picture of the level of debt our governments will be accumulating over the next 4 years, as they do what the Reserve Bank suggested, to borrow as much as necessary while interest rates are low, at record lows, to rebuild their economies after the recession this year. The Australian Capital Territory government, which was re-elected in October, won't release its 2021 budget until early next year, but it's published a pre-election budget update in September with its latest forecast. So, with that background, collectively, their budgets show state and territory net debt is forecast to grow from a combined $235.1 billion this year to $401.5 billion by 23-24, with 38% of that debt belonging to Victoria. Nice one, Victoria. Nice. That's the second Borat reference I've snuck in here. There you go. So 235.1 billion up to 401.5 billion. I mean, it's a big chunking. It's a big increase, but I mean, it's probably expected. I mean, we knew that government's going to need some money.
Yeah.
So, I don't know. I don't really follow this macro stuff, so I'm not really in the best position to kind of give my insights on it. I don't know whether it's like really good or really bad or anything, but I just thought that I would bring it up as a bit of a news topic because it is interesting information.
Yeah, certainly. I wonder why Victoria is so high. I wonder if the longer hard lockdown that we went through has an influence on that, or whether the spending is in other areas, or whether Victoria is always a big part of the debt. I don't know. It's one of those numbers where it sounds outrageous, but you also don't know to like what level it's bad.
That's right. Yeah. So I was looking into it, and most people compare it to the country's GDP. Well, I should say, So that was our state and territory debt. So it says that comes on top of the federal government's forecast net debt of $966.2 billion in 2023-2024, which will bring net debt across all levels of government to $1.4 trillion in 4 years' time, up from $938 billion that we see today.
Right.
So that's still a fair hike.
Yeah. So net debt, I presume that's net of taxes that come in.
Yeah, I would assume so.
Yeah, so it's like a deficit.
I think that's
basically
just the straight up amount that they have to pay back, kind of thing.
Yes. Yeah. Okay. Wow.
So it says here, I was just having a bit of a squiz around 2019 debt to GDP ratio. So debt to GDP, debt on the top, GDP on the bottom. So obviously you want lower. Lower would be better. Mm-hmm. So 2019 debt to GDP was 45%. Trading Economics has that estimated to rise to 50% in 2020. I really have never looked into this debt to GDP ratio before. And I was interested. I was like, well, how does Australia stack up? Over in the United States, their 2019 debt to GDP ratio was 107%.
Oh, boy.
Yeah. So, I mean, when you look at it like that, it doesn't really seem like we've got much to worry about down under.
Yeah, we're only half as screwed as
only half as screwed. That's a good way of looking at it, Hamish.
It's a nice, bright, positive way to look at this news story.
And with that, we better wrap up the podcast. No.
We're only half as screwed. See you guys.
Yeah, all right. Yeah, that's cheery. But anyway, I just thought I'd chuck that in. But I don't really have too much more to add to that. Hopefully we can see our GDP go up and our debt go down. I guess that's what we want.
Probably not, though.
So it's probably not what we'll see, right?
Probably not. Pretty sure it just goes up every year, regardless of what happens. So
yeah, exactly. Is that it for today? I think that's basically all of our news stories covered. Should we do a couple of Q&A questions?
Yes.
And then get on out of here?
Let's do it. All right, I'll read this one to you.
Sure.
Investing books you're currently reading. Anything you're reading at the moment?
Ooh, crap. I was reading one that I can't. Well, see, this is the thing with me. I'm not a big reader. I just I'll listen to audiobooks for sure, but the audiobooks have been on the back burner recently just because I've been so busy. But I'm trying to find it. It was whatchamacallit, what's his name? Who wrote The Big Short? Michael Lewis, I think. I'm reading another one of his books, which is called Flash Boys, which is actually quite interesting so far. I haven't got very far through it, but I think it is the story of it's a story of high frequency trading.
Right.
And they're telling, so far I'm up to like the story of how some dudes figured out that the fiber optic network connecting a data center in Chicago with the New York Stock Exchange, it was, the line that they used for that was just like a telecommunications provider's line. So it kind of zigzagged and went here, then went there, then went all around, and then did a loop, and then went back to where it came from. Then went over. So it was just like it was like a network for people to use. So this guy figured out that there was a big advantage in having literally just milliseconds extra time as opposed to what the system was. So essentially he just built this dead straight line of cable between the two, and it was just like I haven't gotten that far through, and I'm not sure I quite fully understand it yet, but he's now in the process of essentially selling milliseconds to big banks and whatnot to do their investing, to get a little arbitrage kind of advantage, I think.
Wow. That's fascinating.
It's interesting. I like I said, I'm only early on and I don't quite understand how it all works because I don't really understand the technology. So, but I find it quite interesting. So
yeah. Very good.
Would recommend. What are you reading anything?
I think I'm in the same camp as you. I'm off and on. I do have a book at the moment that I've been reading, Mastering Market Cycles, I think it's called, by Howard Marks. Okay. So I was doing some online looking into his stuff, and then I just picked up the book a while ago, and I've read bits and pieces of it, but nothing sort of a consistent read at the moment.
Right. Okay.
Yeah, it's a really good book, by the way. From what I've read, it's cool. It's very, very good.
Have to put that one on the list. All right, let's get into this one. How do you stay patient when stocks are high, and how do you stay calm when the stock market is crashing? Geez, that's a good question.
Yeah. Oh my goodness. Okay. How do I put this together? How do you stay patient when the stock market is high? I mean, so like when I'm investing in individual businesses, for example, which is where you would want to care about when the market is high and low, because if you're just buying an index, you don't really care. You don't care at all. You should just be consistently adding. But when I'm looking at individual businesses, I mean, I've done an analysis. It's written down. It's in it's in written form. And I have a buy range that I've come up with under my own analysis. So if all of those are far below the price that the market is offering me, then that's okay. And that's the case most of the time. I've spoken about this a lot over the past week in a lot of videos, in that most of the time, the businesses that I want to invest in are too expensive because they're good businesses. It kind of makes sense. So just having that recognition that it makes sense that a Facebook has a 35 PE. Even though you buying it now might not get you and Facebook's just an example, I don't actually know, but even though buying it now might not get you the best, 15% return, it's normal that the stock is high because everyone recognizes that it's a good business. So I think just having that recognition and having your set buy prices that you're willing to go in at, and on the other side, staying calm. I mean, if you're investing in good businesses, then it doesn't matter if prices are going down, because you know that nothing fundamentally has changed in the business. The same as if you're buying an index fund. When the market's going down, you know that the economy isn't going anywhere. The Australian economy is not going to shut down. It might be impacted in the short term for a period of time, but you know that over the long term, as long as it's a pretty free market economy, then you're going to get businesses that compete against each other to make better and cheaper products. And that's going to increase the value of their businesses over time. So I don't know. I don't know if that's a good answer. There's nothing I really.
Yeah, no, I think it is.
There's nothing. Go on. Maybe you share some insights.
No, I was going to say very similar things. I think I was going to say, how do I stay patient when stocks are high? The number one thing is to have a strategy, and have a strategy that tells you, like what you're saying, knowing your buy price. Have a strategy that tells you what your buy price is, so that if it's high, you go, oh, hang on, my strategy that's proven, and it tells me when I should be buying shares. It says, no, it's too high. So, I acknowledge that because the strategy says I shouldn't be buying, if I bought in now, then that would be very risky. And I don't want to take risk. I want to take the least amount of risk possible and get the highest return I possibly can. And then how do I stay calm when the market is crashing? To be honest, I don't really know. I don't stay calm when the market is crashing. I get very, very excited. Yeah. And I think that's just having read a lot and listened to a lot of smart people on investing, people that I look up to, Warren Buffett, Charlie Munger, Phil Town, Monish Pabrai, blah, blah, blah. You hear the consistent themes of, buy low, sell high, when the market's crashing, that's the best time. You want to go out there with the wash tub, blah, blah, blah. So I think I've just somehow that's gotten ingrained into my brain, because I honestly, back in March when the market, I was invested still in March, I had some positions in companies and those companies went down 30%, and I looked at that. But for some reason, I think this is just because I've just had it drilled into my brain so many times now, I actually didn't feel bad when the stocks went down. And in fact, I remember, because I was talking to you, because I was in Melbourne and we were talking late at night, because we were like, man, are we buying stocks right now, or are we buying stocks? Yeah. I was literally excited. Even though on paper I just lost a bunch of money, and even though the fear and uncertainty was coming out in the media, whatever, I still felt excited. So I definitely thank the world's best investors for that one, and thank their reading material and their audio material that I've digested and has obviously had an impact on me.
Yeah. And I mean, if you have money to invest, if you have cash to invest, then the stock going down is the best thing that can happen. If you have money you want to invest, then the stock going, even if you have some money invested in the market, being able to invest more at a cheaper price is going to far benefit you than if the stock if you just had to buy it at a higher price and the market just went up in a straight line. If the market goes up in a straight line, you make less money than if it goes up and down, even if you're mostly invested most of the time. True. So, and that might be a tricky thing to wrap your head around. How could I be 70% invested, the market goes down 30%, but I'm still better off than if it didn't go down? That's a hard thing to wrap your head around, but that's just the reality of the market. So I don't know. Yeah, I think just reading a lot. I think what you said at the end is really important. Reading a lot and listening to Warren Buffett, Charlie Munger, listen to these value investors and their principles, and that will kind of drill it into your head, and that will give you a sense of calm when everything's kind of hitting the fan.
And you don't even have to listen to them. You can watch what they're doing. It's like Warren Buffett in the last quarter. Berkshire Hathaway stock gets crushed. Yes, it bounced back quite quickly, but then it was volatile and it went down a little bit more during Q3. And during Q3, he bought $9 billion worth of his own stock. So, I mean, that's an action which is like, okay, Warren Buffett thinks that his company is undervalued. Maybe that gives you, it's things like that. You can listen to what they say, but you can also watch what they do and gain insights into what they think about certain companies or certain economic climates. I mean, Buffett in the annual shareholder meeting, he gave a big spiel. Obviously, all the questions were like freaking out, and he discussed his what he thought about the market situation at that point. So yeah, and you could definitely, if you just follow these guys, like if you just follow them and look for news related to Warren Buffett or Charlie Munger and blah blah blah, then you can kind of watch what they're doing, listen to what they're saying, even in the current time, and that can give you some sort of insights. And watching 13 Fs as well, like what are they buying, what are they selling, and that sort of thing can help you out a lot as well.
Definitely. Should we wrap it up there?
Yeah, I think that's a good time to wrap it up.
Definitely. Thanks everyone for tuning in. And as we said at the beginning, if you do have any questions that you want to ask us for the next couple of episodes, as well as that specific Q&A episode, then make sure you head over to the YouTube version of the podcast at youtube.com/The Young Investors Podcast, or you can just, of course, search for it on YouTube. Click on the latest episode and leave your questions as a comment below that video. And we'll look forward to continuing to make content while we even have that break over
and
Christmas.
even just sorry to butt in, even if it's not a question, if you just have a discussion topic you'd like us to discuss our thoughts on this or that, then just let us know.
Absolutely. Yep. And thanks Sharesight for sponsoring. As always, go check it out if you're interested. Sharesight.com/young investors. Thanks Brandon for joining me as always.
No worries.
And we'll see you guys next week.
See you guys.